big picture question. When you see the type of action that we have been seeing in the likes of GameStop and AMC, does that influence your overall portfolio construction for the stocks that you're typically a long-term holder of that aren't themselves the likes of GameStop and AMC?
Yeah, I mean, it definitely does, because you're trying to manage the risk in your portfolio in a time like this. I mean, let me be clear. I think that what we're seeing in GameStop is absolutely terrific for the markets in the sense that it's getting individuals that might not have invested in the stock market actually interested in the market for the first time. I mean, I got my wife's cousin, who's a college student, had told her yesterday, hey, I'm actually in GameStop. And so that was interesting. I got texted a couple of days ago by one of my godsons saying, hey, what's going on with GameStop? And so my feeling is if you can get everybody involved in the stock market, which is the greatest wealth creator over a long period of time, that'd be terrific. And if this is what gets people looking at investing, you know, that's wonderful. But yes, as a professional investor trying to manage over a long period of time, you know, I look at this and I say, okay, how can I take advantage of this to de-risk my portfolio? Because the wild swings you're seeing in GameStop, by the way, you're seeing in other companies not as violent, but I'm seeing stocks move up and down 5 to 10% a day that, you know, there's no news other than what you're seeing in some pockets of the market. And so that's what I'm trying to deal with from mine.
So tell us how you have managed that risk. You've decided to short a few of these names.
Yeah, I mean, so 2 days ago, you know, I was looking at some of these names. And by the way, so the lead up to this is important. You were seeing a lot of companies pre-announcing positive results, and they were actually going down the day of earnings. I mean, even if you look at it today, the last time I checked, Apple was down after huge numbers. Facebook was down after huge numbers. Microsoft was barely up yesterday, but AMD got just absolutely killed yesterday, as well as a few other names. So for me, I was starting to get worried about what I was seeing. And so 2 days ago, I started shorting a basket of over 50 names. GameStop is one of those names that was in there, so that I felt more comfortable owning some of these other very volatile names and felt like, okay, I can own them through this because they may go down 10, 20%, but, you know, GameStop started the year at 20. It got to 350. I actually shorted some more of that basket this morning when it was, you know, up above 400 because it helps me de-risk the rest of my portfolio, which is what I'm trying to do. So that's kind of how I think about it in a big picture. But don't get me wrong. I think investors investing in GameStop should absolutely be able to do it. You know, they should be warned of the risks, obviously, and they shouldn't be putting their life savings into it or food they need to eat. But I think it's terrific.
What do you make of the backlash against short sellers? Like, I'm not saying you're a short seller, but you do short stocks, and just hedge funds in general, and this sort of rage against the short sellers that have been ripping off the retail traders for years, and the tables have turned. And now even the regulators, including Senator Elizabeth Warren, who's going to join us in a few moments, are eyeing people like you.
Yeah, no, I mean, I look at it this way. 90% of the people in the market are invested long. So anybody who's thinking a stock will go down, you know, people don't like. But, you know, I remember the same thing in front of Lehman Brothers. As you probably remember, there were a lot of people coming out saying, you know, we think the banks might have a problem. And, you know, there were all kinds of outcry against it. And then we figured out in hindsight that those people are absolutely 100% correct and the regulators were 100% wrong. And so the problem is being short is very, very difficult because you can suffer infinite losses. If you were short GameStop at 20 and the stock hit 450, you not only lost all your investment, but 25 times what you put in. Stocks can go up infinitely. So it's a lot easier to be long, and over the long term, that's exactly where you want to be. So for me, the short sellers, you know, they have a really vital role because they're going to catch a lot of things that the regulators and, you know, the average person is not necessarily going to catch because you take on, you know, infinite more amount of risk being short a stock than you do being long it. If you're long it, you can only lose 100% of your money. If you're short a stock, you can lose infinite amounts of money. And we saw that in names like Volkswagen back in 2008, which you may remember was the most valuable company in the world at one point because of a violent short squeeze that Ferrari helped set off. So, you know, it's fine. I mean, I'm kind of used to, I always get a lot of hate mail when I talk about, oh, I'm short this or that, but it's really to protect the other part of the portfolio. And so that's part of the job.
Shepard Smith here. Thanks for watching CNBC on YouTube.